Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about IMMUNOCORE Holdings PLC quarterly report. IMMUNOCORE Holdings PLC offers a diverse range of products and services for various medical conditions. The company's main business includes development and commercialization of immunotherapies for cancer treatment of patients with unresectable or metastatic uveal melanoma through IMMUNOCORE oncology programs, including plus tebentafusp Phase 3 clinical trial for advanced cutaneous melanoma and adjuvant uveal melanoma plus brenetafusp Phase 3 clinical trial for first-line advanced cutaneous melanoma development of treatments for various diseases, including plus advanced solid tumors, colorectal cancer, plus HIV, IMC-M113V, plus HBV, IMC-I109V, plus multiple solid tumor cancers, IMC-T119C, plus type 1 diabetes, IMC-S118AI, plus atopic dermatitis, IMC-U120AI. IMMUNOCORE Holdings PLC's stock price drop. A year in review over the past year, IMMUNOCORE Holdings PLC, IMCR, has experienced a decline in its stock price, exceeding 7.91% at one point. Several key events contributed to this downturn. In December 2024, Morgan Stanley downgraded IMCR from overweight to equal weight, reducing its price target from $74 to $35 due to disappointing data outcomes for the company's brenetafusp in trials for cutaneous melanoma and ovarian cancer. Additionally, Mizuho Securities downgraded IMCR to a neutral rating, slashing its price target to $38. The stock also reached a 52-week low on September 23, 2024, dipping to $32.07. Furthermore, consensus earnings per share, EPS, estimates for IMMUNOCORE fell by 12% in July 2025, and the stock experienced significant declines in October and November of that year. These events, combined with analyst downgrades and concerns over pipeline drug performance, have driven a notable decline in IMCR stock price. Despite exceeding analyst expectations for Q2 2025 earnings, these factors have outweighed positive developments, resulting in underperformance compared to the U.S. biotech industry and broader U.S. market. The primary drivers of revenue growth in the company's financial performance can be attributed to several key factors. Firstly, a significant increase in revenue from the sale of therapies, net, with a 29% rise from 2024 to 2025, demonstrates strong market demand and successful product offerings. Additionally, the approval and launch of IMMUNOCORE in additional territories have contributed substantially to revenue growth, with 39 countries approved and 28 launched. This expansion has led to increased sales volume in various regions, including a notable 17.8% increase in the United States, 58.4% in Europe, and 52.5% in international regions. The successful completion of clinical development and regulatory approval for product candidates, such as IMMUNOCORE, has also played a crucial role in driving revenue growth. These factors have collectively contributed to the company's revenue expansion. In contrast, there are no explicitly mentioned primary drivers of revenue decline in the provided summaries. However, potential risks that could impact revenue include unforeseen events such as natural disasters or health system emergencies, which may hinder clinical site enrollment and patient access to adequate third-party coverage and reimbursement. Net income and profit margins. A tale of two contrasting trends. The financial performance of the company reveals a stark contrast between its quarterly and year-to-date results. In Q3 2025, net income plummeted by an astonishing -99.9% compared to the same period in 2024. Conversely, YTD 2025 saw a significant increase of 80% in net income compared to the previous year. Profit margins also underwent a drastic transformation. The company's net income margin decreased from 10.9% in Q3 2024 to -0.17% in Q3 2025, indicating a substantial decline. Similarly, YTD 2025 saw a decrease in net income margin from -12.1% to -1.85%. The reasons behind these changes are implied by the company's significant operating losses, an accumulated deficit of $801.2 million as of September 30, 2025. The shift in focus towards product sales and marketing approval has led to potential delays or discontinuation of development due to funding issues. This has likely contributed to the decline in net income and profit margins. The company's financial performance indicates a consistent generation of positive operating cash flow. In 2025, the net cash provided by operating activities was $21,943,000, while in 2024 it was $40,012,000. This trend suggests that the company is efficiently managing its operations to produce a steady stream of cash, positioning itself for long-term financial stability and growth. The company's debt level and interest expenses have undergone significant changes over the past year. Debt level. The company's debt obligations increased from $364.6 million in December 2024 to $393.9 million in September 2025, a slight increase of approximately $29.3 million. However, by September 30, 2025, the debt level had risen to $402.5 million following a private offering of notes. Interest expenses. On the other hand, interest expenses have decreased significantly over the past year. The company's net interest expenses increased by only 15% from 2024 to 2025, indicating a relatively stable financial situation. Furthermore, interest expenses for the 3 months ended September 30, 2025 were $3 million, down from $4.3 million in 2024 and $9.1 million for YTD 2025, compared to $11.8 million in 2024. In conclusion, while the company's debt level has increased slightly over the past year, interest expenses have decreased significantly, indicating a more stable financial situation. The company's financial performance has been mixed across different regions and segments. Europe has been a standout performer, with revenue growth of 58% in the first quarter and 79% in the first 9 months. The United States also saw growth, albeit at a slower pace, with increases of 18% and 15% respectively. In contrast, the international region struggled, with only 52% growth in the first quarter and 11% in the first 9 months. However, certain segments within the company have performed well, including revenue from therapy sales, which rose by 29% and 31% over the same periods. Partnered revenue also saw significant growth, increasing by 122% and 86%. Management is projecting a challenging financial outlook for the company due to significant expenses incurred from advancing late-stage clinical programs and expanding global operations. The company expects to incur operating losses in the foreseeable future, driven by increased R&D and SG&A expenses. To finance its operations, management plans to explore various funding options, including public or private equity offerings, debt financings, collaborations, and marketing arrangements. Additionally, the company may require additional capital to pursue licenses or acquisitions of other product candidates. The company's financial summary reveals that it has taken a conservative approach to shareholder returns by neither paying out dividends nor engaging in share buybacks. This decision suggests a focus on retaining earnings for future growth and investment opportunities rather than distributing them to shareholders immediately. Supply chain disruptions pose concerns for business operations. The company's financial summary highlights several potential risks that could disrupt its supply chain. These include worsening macroeconomic conditions, production shortages resulting from external events, and proposed tariffs on imported goods. Additionally, ongoing military conflicts in Ukraine, Russia, and the Middle East may impact clinical trials and commercial operations in these regions. These concerns suggest a high risk of supply chain disruption, which could have significant consequences for the company's business operations. That concludes the financial summary for IMMUNOCORE Holdings PLC. Feel free to comment below, and I will be happy to answer them when possible.